Good afternoon. We're looking at the gold market, and as you can see what has happened, we've gone up to the first target of 1636. We've broken that, and we've been to highs of 1643. Now if I squish this over, you can see that the 38.2 fib is coming in at 1646. Now that's quite important area of Fibonacci extensions and retracements, to be fair. And you can see that the market is extremely overbought, but when markets trend, whether or not it's overbought is by the by, because by its definition, the RSI is the relative strength index. So all these indicators that I use, and I don't just look at the RSI and the stochastic, I do look at others, but all of them work extremely well in sideways markets. But where they don't come into their own is when markets start to trend, because obviously if you're looking at an RSI and the market keeps going up, it's going to be overbought a lot. It's a bit like the S&P. Right through the last 2 years, it's been overbought and flatlined above 90%, more than any other market I've looked at in that time period. So don't be too hasty in wanting to get out of gold because it's overbought. It doesn't really matter. You'll know whether or not to get out of your longs, because if we can't break 1646, you're going to see a correction. If we look at yesterday's high, which was 1623, then that should now offer support, and obviously underneath that you've got where the market double topped at 1611. That will act as excellent support now, and you'll find that when markets go higher on when they're trending on the retracement, the indicators fall far greater than in sideways trading ranges. And the reason for that is it takes just a little downward spike to turn them indicators and push them down to neutral. They get to neutral, they get bought up again. You can see where gold has just blipped neutral 3 times on the pullback. And if you look at where we were at 1611 to where we actually went to, which was like not that far away, it came down to nearly oversold. So that's your gauge, I think, is that yes, obviously we look at them, but don't put too much store in them at the moment. So 1646, I think you're going to see profit taking around there. All those little Johnny-come-latelys who didn't buy as the market broke higher are all beginning to go, oh dear God. You would have seen a lot of selling at 1611, and stops would have been put above 1636, because that's the natural place where the algos would be to stop hunt. But we've kept going. So as we've kept going, we look at 1646. If we do break, the next level on gold will be 1655. Now, I've got to give you these levels because obviously if the market goes up on a Friday afternoon, and don't forget on a Friday, it's very thin and whippy. So if we go up on a Friday afternoon, it is because I think a lot of people are trying to pick a top. Don't pick a top in this at all. What you want to do is, if you're long, cover at the designated resistance levels, wait, buy it back at the designated support levels. Try not to top pick, because if you try that, you could come unstuck. Good luck, have a great afternoon, and I will catch you either on the desk this afternoon or bright and early Monday morning.